It's okay. We have Jeremy Hamlin, Rebecca Valdez, and Jessica Alderete to talk about contracts and grant accounting.
All right. Thank you, Vanessa. So like she said, my name is Jeremy Hamlin. I'm a supervisor with the Contract and Grant Accounting Office. Presenting along with me today is Rebecca Valdez, who's also a supervisor with Contract and Grant Accounting, as well as our Office of Sponsored Projects. And then Jessica Alderete, who's the other supervisor in our Contract and Grant Accounting Office. So we're going to take turns going through the slides here. If you have any questions as we go through stuff, if you can, hold them till the end of our presentation, and then we'll go through all the questions at the end. So I just want to give an overview for what our office is responsible for. So we provide support to the PIs, the departments, and in this case, the branches. So we are there to help administer the sponsored projects, to monitor the spending, and make sure you maintain sufficient fiscal controls to ensure compliance and terms and conditions with your particular awards. We also want to make sure you're in compliance with federal regulations, state regulations, and any agency-specific terms and conditions of the award. So once the award is actually funded, the fiscal monitors will manage and oversee the award from basically beginning to end. We'll set up the contractor award in Banner, which is our financial system. So we will assign a grant number and an index number so that you can start spending on that particular award. We'll monitor the expenses as they occur. We will bill the agency according to the terms and conditions of that particular award, whether it be monthly, quarterly, if it's a fixed bill that needs to be sent in after a deliverable, whatever the particular terms of the award call for. We collect the receivables. We submit financial reports according to the award conditions, and we close the award when it's ended. One of the main responsibilities our office has is dealing with any compliance requirements and annual audit requests. These audits are driven on compliance. So we just are there to help make sure that you adhere to those particular requirements and regulations. And again, like I said, we're responsible to make sure the award's spent in accordance with federal, state, and UNM policies. The adherence that, you want to make sure you're in adherence with federal guidelines. So for federal grants, you're really ruled by the OMB uniform guidance. That's a relatively new kind of overriding federal regulation guideline. So we used to refer to these as the OMB circulars, A21, A110, A133. They combined about 8 circulars into one overall uniform guidance, and that went into effect December of 2014. And then you have the FARs, which are the Federal Acquisition Regulations. That basically deals with federal procurement. So anything involving federal procurement, there are particular FARs that you have to adhere to. And then in addition to all that, you have specific agency terms and conditions. And then always UNM policy comes into play as well. So this slide's just to give kind of a general overview so you can see the role our office plays in the overall life cycle of the award, as well as the role pre-award or OSP plays in the process. So it basically starts right here at the top, and it's going to go clockwise. But it's going to start with your proposal development. And really, OSP and the branches are going to be playing most of the crucial roles here in the first half of the life cycle on this particular diagram. So you've got proposal development, institutional approvals, proposal submission and sponsor review, and then you have award negotiation. So like I said earlier, as soon as that award is accepted and signed by our Chief Financial Services Officer, that's when we kind of come into play for the awards setup. So for this award startup, like I said, we're assigning a grant number, a fund number, an index number, so that we can track expenditures for that particular award and monitor those expenditures. Really, the department's going to be the one spending the award funds, but we're kind of there to help support you to make sure those awards funds are spent in accordance with the award. The award monitoring comes into play. Again, this is roles I think both the branches as well as the fiscal monitors will play. And then at the end of the life of the award, we're responsible for ensuring that the award is closed in a timely manner, which is set forth in the uniform guidance. But we'll get into specifics of all that in a couple more slides. So this is basically cradle to grave of the award process. Okay, so I already mentioned a little bit, but the grant fund and index numbers are set up in Banner at the award startup so that we can actually track expenditures per award. After the index is set up, you will be notified by your fiscal monitor via email what the index number is so that you can begin spending. At that point in time, you'd also want to work on the signature authorization form. This form basically tells us who has signature authority on your particular award, so that's required on each award. And that's the responsibility of the PI to fill out, and I think it lists all the departmental people. This comes into play like on DPI approvals, when we need to know who's signing what and who's responsible for what. That particular document really comes into play. I'm going to talk a little bit about cost share. So if there's mandatory cost share committed on a proposal, a restricted index will be established for the cost share. And just so you know, the cost share is the portion of a sponsored project that is not paid by the agency. And typically that's most likely paid by the university, although it could be paid by a third party. Cost share has to be spent in accordance with the general terms and conditions of the actual award. To give you an example of those terms with cost share, it could be a 1-to-1 ratio. So in that case, if 90% of the award funds are spent, 90% of the cost share funds need to be spent as well. So once the percentage of cost share matches the percentage of funds used from the funding agency, the remaining amount not spent is then returned to the unrestricted index that funds that cost share in the first place. I do want to touch a little bit on instructional material awards with ABE, Adult Basic Education Programs, because I think most of the branches have adult basic education programs. So when an award is received from the ABE program for instructional materials, our office sets up the award in Banner with a project end date to be in the following fiscal year in December. If there are funds still available to spend after the termination date of the award, you can send a request to your fiscal monitor requesting for the period to be extended. We recommend if there are several awards open for instructional material that you spend the oldest funds first. And the last slide I'm going to touch on here is just kind of a general overview. So basically replace department with branch. So these are things that we're working with you, with the branches to ensure that we're all in conformity with all the regulations. So our role is to monitor spending and ensure compliance on the awards, but ultimately the branches are responsible for ensuring that costs are allowable on that particular award. And you should be reviewing these expenditures monthly. So, that's something our office does somewhat when we do the billing. But at the end of the day, your awards better than anybody. So you need to ensure that, costs are being spent within, the terms of the award and are allowable and reasonable for that award. So although we want expenditures to be coded right the first time, sometimes there are circumstances that prevent departments from doing so. So if needed, cost transfers can be done to move expenditures off of awards and onto new awards. If JVs or cost transfers are needed to correct an error, there must be adequate documentation to support the need for the cost transfer. Specifically, if it's over 90 days from the date of the original transaction, there needs to be a 90-day memo to support why that cost transfer is happening 90 days after the initial transaction. In addition, PIs are responsible for monitoring any subrecipients. So if you receive any subaward through one of your sponsored programs, you have to ensure that the invoices submitted by those subawardees reflect allowable costs. And in addition, you kind of need to track to make sure that any progress or technical reports are kind of falling into place with the terms of that particular subaward. PIs are going to be responsible for certifying that effort put forth on sponsored projects is accurate and correct. So effort certifications, that's going to be a requirement for all sponsored projects with restricted money. And the PIs are basically certifying that the effort put forth on the award is accurate and correct. This is done twice a year by UNM. And then, like I mentioned, the award closeout, really that's, again, something that, the fiscal monitors are responsible for the award closeout, but it's really a back and forth relationship between the branches and the fiscal monitors and ensuring that's done in a timely manner. You're required to ensure that any adjustments or cost transfers that are needed after the award is closed are done so that our office can properly close out the award in the required time frame. But we're going to go into all this stuff in more detail in the following slides. I just wanted to give everyone kind of a general overview before we get into the details. So with that, I'm going to turn it over to Rebecca.
So oftentimes, most cases, we're always asked what our policies are. And I think by going over this slide, hopefully it kind of give you some better understanding and the complexity of that particular question. So in this triangle here, this is the order of precedence. And within this triangle, we build a foundation. And as Jeremy mentioned and stuff, our regulations is basically based upon the OMB uniform guidance. So this is going to be our foundation. Of course, these are our federal awards. And then after the foundation is built, we got the agency terms and conditions that come into play. And then after that terms and conditions, there's particular programs within that agency, like Carl Perkins, you got your HEP programs, you got your CAMP programs and stuff. So that there are particular rules and regulations to that particular program, right? And then after that program, you got your award terms and conditions. So you got a level of a lot of compliances here. And at the end of the day, really what governs is going to be your award. But also considering that you got public law to consider and also institutional policy. And sometimes institutional policy can trump all of this. So it's not a very clear answer, but at the end of the day, I think the first thing you should start off is the award terms and conditions. Kind of clear as mud type of thing. So hopefully that kind of gave you a little bit of a way to go on things. And along this line, I think we received a question. I think I'd like to go ahead and address it at the same time as I did this. One of the questions is, how can the departments know when to go to OSP or fiscal monitor for budget revisions? So it depends. So, right, it depends on your particular award, your particular program terms and conditions. One thing to always know, though, is that if there's a major scope of work change, the scope of work in itself, if you have a change in that, that's going to go directly to OSP. You're going to have to go ahead and get that changed strictly to the agency. The agency needs to be aware that there's a scope of work change. And then like for budgets, sometimes it depends on your agency. If you're just changing budget from one line item to the other, there are some terms and conditions that allow you to do that within a 5% range or a 10% range. And that is you being aware and know your award's terms and conditions. It's going to be outlined in your terms and conditions. Contact your program manager for that particular agency. They're going to tell you that. As you know, a lot of you guys deal with the state agencies, and they're different across the board. I know for a fact DOT requires for you to submit a revision and budget through the OSP because they are going to need to sign off on those particular documents. And there's some other state agencies that really don't care to know. So it's about you being familiar with your agencies, communicating. As we've all mentioned, is the communication part that's going to get you through this. So, but if you're not too sure, definitely contact your fiscal monitor. So hopefully I was able to answer that question. Okay. So moving on from here. Factors affecting allowability of costs. This is stemming from the uniform guidance. So having a proposal is a great accomplishment, and of course you know UNM is a large research institution, and we're actually here to help you with these particular questions and answering any of these things that you have, any of these questions that you have. Basically, we're here to kind of tell you or show you how your program to kind of keep you out of trouble, in a sense of definitely charging things that are necessary, allowable, and reasonable to your award. Costs must meet the following criteria: be necessary and reasonable to perform the federal award and allocate under these particular principles. Conform to any limitation or exclusion set forth in these principles or in the federal award as the types or amounts of the cost items, and be consistent with the policies and procedures and apply uniformly to both the federal financed and other activities or the non-financial entities. Also, be given consistent treatment. If a direct cost is charged to a federal award, that direct cost should not be incurred in the indirect cost basis of it. Be determined in accordance with general accepted principles, which is your GAP, except for the state and local governments and Indian tribes. Not be included as a cost or used to meet cost share or matching requirements or any other federally financed program in either the current or previous or prior period, and of course be adequately documented. Along with us here in the office, you need to also know the rules and regulations, because if following an audit, the agency disallows a particular cost, you are ultimately responsible to covering that particular cost. It's your department, not necessarily the main campus or office. Currently, these are some unallowable. It's easier to talk about unallowable than allowable because it all depends on your program, right? So here are some unallowable. Expenditure for general purpose equipment, such as desks and paper. General purpose equipment that cannot be specifically allocated to a particular project is unallowable. But computing devices under $5,000 may be directly charged if the machine in itself is essential and no other available equipment can achieve the same purpose. Of course, extravagant and convenient purchases are unallowable. Your personal living expenses and entertainment costs are unallowable. Your donations and your memberships and your lobbying is unallowable. And your alcohol beverages are unallowable. But then again, it depends on the program, because we have a program here in main campus that's CASA that kind of deals with the research that has to do with alcoholism, right? So that particular program states that you can purchase or do any kind of research with the alcohol, and of course you have to to purchase that stuff. So in that particular case, it's allowable. Okay. For the research. Not for a very hard day at the end of the day, right? Or you have to like. Yeah. So one item that actually is not listed here, but it was listed before, was administrative salaries under the Circular A21 that actually before the uniform guidance, that particular project had to be specified project must be large and complex at a remote site or involve extensive data analysis in order for the administrative salaries to be charged on the award. So administrative salaries under the uniform guidance state that administrative salaries must be integral, right? Must be integral to the project. Individuals involved can specifically be identified. The costs have been included in the proposal during the proposed budget, and the federal agency has given prior written approval in order for the award to have those charges. So you can actually propose it. You can say that I'm going to have an administrator and it's going to be specifically for this project, and it is necessary, but you got to have that written approval by the agency to allow you to actually charge it on the budget. So that's actually just a change with the uniform guidance, which I kind of think it's a good change. So it is good practice to review and reconcile your expenditures that hit the award on a monthly basis. I cannot stress that enough, on a monthly basis against our financial system, which is Banner. I know sometimes people use shadow systems. I want to say don't, but I know you guys do. And if you do, please get in the habit of actually reconciling it with Banner, because that's where you're going to go ahead and actually find some deficiencies. Maybe you thought something was charged that you had in your shadow system, but it's going to turn out to be that it was never really costed in your index. So that's where you're going to find out that there's some issues, and that's when you go ahead and take action and correct them, because the ultimately thing that we want to do is get them corrected within that particular month of the billing. We still have some time from when our actual books closed, which is normally 4 to 5 business days after the month has ended, for you guys to submit JVs of corrections if those are caught. That's why we ask for you to look at your awards on a regular basis and have that thought that if you can catch those errors, you can correct them. It's definitely more important because a lot of us do state invoicing, right? So when we submit those invoices to the state, they require backup, a documentation to submit with the invoice. So if you're able to go ahead and actually catch those errors and correct them within that month, you're able to have your documentation coincide with the general ledger that we submit to the agency. So we definitely emphasize that you look at your expenditures and reconcile in them on a regular basis. There are 3 different ways to determine your index fund balance and see the detailed activity in your awards. I'm not too sure if everybody really has access to Banner. I hope you guys do, because it's such a great tool to actually look up your expenditures and your budget and what you've spent. And the screen is called Frigidit. This particular screen allows you to look up your grant inception to date. You can actually narrow it down by quarter, by specific month, by half the year, whatever case it is. It's very flexible and allows you to see those specific charges. And then it allows you to reconcile and question certain items if you don't feel that they should be charged to that award. Also, we have in My Reports. Do you guys have access to My Reports? A lot of you? Okay. There's a grant ledger detail and a salary, labor benefit, and encumbrance report. This grant ledger basically does the same thing that's Frigidit. This grant ledger, actually allows you to be very detailed. You can print it in a summary form or you can print it in a detailed form, and it will itemize every single charge that has been charged to that particular account code. So it allows you to see, oh, so-and-so got paid here and stuff, and that's not one of my employees, got probably charged to the incorrect account code. You can do that by running this report, the salary, labor, benefit, and encumbrance report, and you can do that by banner ID, and you can do that specifically by index number as well. And then another one is called self-service in LoboWeb. This also allows you to see your employee payroll detail on it. Cost transfers. Cost transfers in and out of restricted indexes. Excessive number of cost transfers indicate poor oversight. Cost transfers near the end of the award may draw audit scrutiny and potential disallowance. And then, as Jeremy touched on it earlier, it says if over 90 days after the original transaction requires a memo stating adequate justification for JVs and labor distributions. The transfers out, having problems here. The transfers out may give the appearance of moving deficits from one federal project to another. And then the transfers in may give the appearance of spending down the award. So you kind of transfers in, transfers out, and you kind of try to hit them all in the right period, right? You don't want to do excessive cost transfers because that's kind of like maybe they're not really reviewing their awards and you know, reconciling the awards as often as they should be. And then let's say if you don't do it on a monthly basis and you decide to do your review every quarter, you might have a lot of cost transfers because they weren't being looked at within a monthly range. And then that usually is definitely a red flag for audits when you see those ins and outs. Next slide here. Requirements in a JV. All journal vouchers created must include sufficient documentation describing why the journal entry is being submitted. There are two important reasons why the documentation must be included. First is to give the approver the necessary information to approve the JV. Without sufficient information, the JV may be disapproved. Second, after an entry has been approved and posted, there are often times that it will be reviewed by others and, of course, auditors. If the reason for the JV is adequately documented, there will be fewer questions on those particular JVs. When preparing a JV, please include the following information in your document text. The who is basically the name and the phone number of who actually submitted and is preparing the JV, and if applicable, the name and phone number of the person who is approving the JV. That could be a PI or the director that actually instructed you to submit that JV on their behalf. Also, the why. The reason why the JV is necessary, please explain what happened or has not happened to cause the need for the JV. And then the what. What is being corrected? Note the banner transaction number and date, which could be another JV. It could be an invoice and or a P-card transaction. If partial amounts are being moved, please include both the document total and the partial amount being moved. Let's see, here's some audits have found that these descriptions are not adequate explanations for JVs to be processed. So allocation of expenses not found to be reasonable is like, I'm hitting the wrong one. No written documentation describing the basis for allocation done differently from supplies than equipment. Also, the text explanation basically just says, just zero out the grant or to correct error. But they're really, that's it. and those are not acceptable, actually. We will disapprove those. And here, these are some actual JVs that we have come through our office. They're actual, of course, you know, and when it says where it says Jane Doe, we didn't really put that person's name on there. But move-in expenses per so-and-so's request. The P card, the second one really threw me off because to me, it was like, it didn't make sense, and basically that was the purpose. It did not make sense, so therefore it was not acceptable. The P card holder must have been asleep at the wheel when this charge came through and did not reappropriation this from the department account, the grant account, which it belongs, which makes absolutely no sense whatsoever. And then the perpetrator for this and many other offenses is Jane Doe. And after having to process 10 JVs to fix mistakes, you can bet I won't be screwing up again. So those are actually have come through. We don't want any of that kind of documentation, especially when an auditor is going to be looking at that, right? So hopefully, this is the end of my slides. I'll turn it over to Jessica. Oh, you know what? And I'm sorry, Jessica. One thing that I wanted to do is before the circulars came in, how many books, Jeremy? I think you said four?
Well, there were
Four?
8 circulars.
8 circulars, but specifically, I think there were 3 of us that pertain to things. So they combined it, and this is basically the uniform guidance. So this is what we basically is our, I want to call it our Bible, to reference. And you guys are required to know this, like the back of your hands here. When I talk to you guys again, I know you guys are going to be very, very familiar with this book. We also have it in the electronic versions at the end of our slides that can give you a direct link to it, which is wonderful to have in your favorites. Thank you.
So as exciting as these little email or these JV texts were, I get to move on to a couple more slides, and then we're concluding after that. Again, my name is Jessica Alderete. I'm another supervisor in the Contracts and Grants Office. The next slide that I'm going to go over is the text that is required in an EPAF, which is an electronic personal action form. And so when the person that's preparing these EPAFs, they also have to be listed as a person authorized on the signature authority form. So if you're not listed on the signature authorized form, then you're not allowed to be doing the EPAFs, and they will be disapproved. But the text that is required in the EPAF is the request, kind of the same as the JV. The requester's name and phone number, and like I said, it has to be a person that's listed on the signature authorization form, a description of the costs that are being transferred, and must include a detailed description explaining why the transfer is needed. And if this information is not included, your fiscal monitor will disapprove it. And I also kind of did a little print screen from my UNM, and this is kind of the link that you click on to do an electronic personal action form. Next, I'm going to go over subrecipient monitoring. A subrecipient, which is also a subcontractor or subawardee, is a third party that receives funding from the university to collaborate in carrying out an externally funded program. Under the uniform guidance, more emphasis has been placed on subrecipient monitoring, which increase the responsibilities of pass-through entities. These new responsibilities include new risk assessment requirements, and new enhanced monitoring and performance metrics. It is the responsibility of the PI to ensure that the performance goals are achieved, to review invoices received from the subrecipients for accuracy and compliance with regulations, with the award terms and conditions, review performance of the scope of work, are met prior to approving the invoices. And then in addition, with the UG, there's a new requirement that the subawards invoices must be approved and paid within 90 days. And we are, within 30 days. And so we are now submitting those through the subaward workflow invoice process. So if you guys have any subs, you guys will be approving them and reviewing them through the subaward workflow process that we did. Also, we must evaluate the risk on noncompliance to determine the appropriate level of monitoring. These risk factors include subrecipients' past experience with particular grant program, results of past audits, change in key personnel, or substantial changes to the systems, for example, internal controls, major software packages, results of federal monitoring. UNM ultimately is responsible for monitoring the programic, financial, and conflicts of interest status of the sponsored research awards to our subrecipients. Next, I'm going to go over the effort certification process. It's a federal requirement that we process every semi-annually. So it's done every January and July, where we do effort certification process through our web-based system, which is done through Global Web. Employees that are required to be certified are the monthly employees. So those are the employees that are listed as 5R in Banner. The reason why we don't certify biweekly employees, which are 2R listed in Banner, is because you guys are certifying them through the timesheets. So that's kind of the certification process, and that's why we don't require you guys to certify them here as well. So if you have like a student being paid, they're not going to be listed on this effort certification process because you've already certified their effort through the timesheet. There are also a couple of screens, e-print screens that are available. They're this FRRECO and FFREC02. These screens are really nice, or these e-print reports are really nice because what they do is they show the percent of effort, but they also show the dollar amount. So when you're looking at the effort certification process through self-service, which is also the Global Web, it doesn't necessarily show the dollar amount unless you drill down. These e-print reports are very helpful because it lists the percent and it also lists the dollar amount. And if you're looking at the effort certification through Global Web and you see it and it looks like these numbers are off, they're not tying, they're not matching. Sometimes they are, and it's a glitch in the system. The amounts that show on these two e-print reports are the correct amounts. So if that's the case, please just contact our office and let us know, and we'll give you a paper copy to certify those outside of the self-service system. And you guys can sign it, and then we'll take it from there and we'll process it. Since this is done on a semi-annual basis, the department administrator listed in Fragrant is the one that reviews it, and the principal investigator is the one that certifies the effort. I think there was a question about about how much effort is required on an award. Famous answer, it depends. So if you know that you're going to be spending a month on the award, then you should put a month in your budget that you're going to be spending on that award. So if 1 month out of the 12 months you're going to be spending on this award, that's how much effort should be applied to your award. But if you have any other questions, please feel free to contact us, or you can also contact our, we have an email address for our office. It's main effort rptng@unm.edu, and you can also find that on our contracts and grants webpage. Again, that is main effort rptng@unm.edu. So this next screen kind of shows you what the effort certification, what it kind of looks like. And right down here, when you're ready to certify or pre-review your effort, you should be seeing this link. If you don't see this link, that means that you need to complete this EOD course and banner role if you're a department administrator. If you're a principal investigator and a faculty member, you can email our office and we'll grant you manual access. But if you're always completing bars, you're going to lose your manual access. So it's good to go on ahead and complete this EOD course and get this banner role, Department Effort Certification Reviewer, so you don't lose that access. So sometimes even when we upgrade the system, some of the PIs lose their access. So if that happens, because we're constantly testing banner and upgrading banner, sometimes we've ran into the cases where the PIs do lose their roles. And so, like I said, you can just contact us, but I think the best course to do is, as a PI, just do the EOD course and select that banner role, so you'll never have to worry about it in the future, and you'll never lose those roles again. Next, I'm going to go over the award closeout timeline. If you guys are an avid user of workflow, 90 days before the award end date, you will see a workflow closeout email. Both the account administrator and the PI will receive this email. It's really nice to kind of do it through the workflow system because it kind of tracks where it is in the system, and we can kind of run reports that are available out there to see whose queue it's in. If you guys ever want some more specific training on that, please just email your guys' fiscal monitors, and we can send you guys slides on how to process closeouts through workflow. 0 to 30 days after the award end date, you typically will receive from your guys' fiscal monitor the closeout reconciliation, the patent questionnaire, and agency-specific forms. We try to send this out as soon as possible, but sometimes what holds it up is when we know that the department has to be moving some expenses in and out. So if that's the case, then you guys typically won't receive it within the 30 days. It will be a little bit afterwards because we want to make sure we put the right expense amount on there. So that's why it's so critical that you guys review your expenses on a monthly basis, and you try to review them after 60 days after the end date. So 60 days after the end date, the index is terminated in banner, which means that you guys can no longer do any JVs, you guys can't do any more labor redistributions because it's termed in banner, and it doesn't give you guys any access to make any changes. That means that the department should have reconciled all their expenses, the index, and have completed any adjustments that are required. So the reason why we try to make you guys complete it within the 60-day time frame is because we need to get the award closeout within 90 days. So we try to allot ourselves at least 30 days after the 60 days to complete the closeout process. And most of the time this also includes sending packets and agency forms to the agency. So in order for us to complete our financial reports, our FFRs that are needed to be completed, or agency forms, we need to have that additional 30 days after the 60 days in order to complete those processes. So it's very crucial that you guys get everything completed within that 60-day time frame. And this is just an email that we received from Elizabeth Metzger, the university controller, stating that we must close all of our awards within the 90-day time frame. And this was effective as of May 15, 2015. Lastly, I'm going to kind of go over some of the tools and training resources. Our website is has great information. We have award startup information, award closeout information, effort reporting, and other forms available on our website. So that's a great tool to go to and check out. Asala also mentioned earlier the RAN website. This is a very great resource tool where we have a bunch of information that has to pertain with the research awards that we have. Other important ones is the research.UNM, this allowable cost for sponsored projects, and the standard accounting research manual. This is really important too. I think with that one, you can, it's a standard accounting research manual, which is a good research manual that has an interactive search feature for most financial topics. So you can use it as a search engine to look for different information that you need. And most important, the uniform guidance, which Rebecca had showed you guys. It's basically a searchable engine here. You can do a control find and search for information regarding the new OMB uniform guidance that we all call our Bible, and we kind of all go to when we need to look at different information. Yeah, Lena.
Is that linked on our website?
It is not on our website, but it is on HSC's website, Contracts and Grants website, but it's not available on our website. But these slides Vanessa will post, so you guys will have access to these links when she posts this information for you guys. And that concludes our section of the training. Do you guys have any other questions or concerns? We're also going to have you guys all brought your cards with you, right?
Yes.
We also have our cards, so if you guys need to get one of our cards, you feel free to do so. Okay. All right, thank you.